Welcome back to our year-end series, Outlook 2025. And we now have a delightfully intelligent fund manager and veteran stock market watcher, Samir Arora, founder, of course, of Helios Capital. Samir, good morning, and thank you very much indeed for sparing time for us.
I have to come here to cheer you guys up.
Well, we need some cheering. You know, at one point in time around October, we thought we were going to run away with a 20% gain on the index, or probably even more. It's been, shaved off to perhaps at best a 10% gain. What's your sense? Do we find the bottom quickly, or can we plumb some more depths before the market rises?
So actually, Nifty is up 10 and the 500 index is up 15. So that's why I feel that it is not in any way some out of line kind of returns. But let's see the guys, because I am positive. Of course, the degree of positivity in terms of how much returns you can make will be obviously less than what we made in the last 2-3 years. But let's do first big picture. So the world, and we have these guys in the US talking about the biggest bubble in US. So if you look at the US market, if you look at the equal weight index or the Russell 2000 index, for the last 5 years, these returns will be something like 10% per annum. So basically, when people talk about US having a big bull run, they are talking about 10 to 15 stocks.
Okay.
And on those 10, 15 stocks, including the Magnificent Seven and a few others you can add, all of them separately, they are cash rich, big beneficiaries of AI, not concept stocks. Their valuations are in 20s and 30s. And for the US stock to have guidance or expected consensus earnings growth of 15% type, from you look at Amazon, you look at Google, you look at Microsoft, all of them, at least as of now, expected to grow earnings at 15%. So what is so wrong about those guys also having premier valuations a little bit, but having gone up a lot and still trading in 20s and 30s multiple with a 15% type of growth? So I don't feel that the US market itself is a bubble just by looking at S&P, which is driven by these 15 stocks. And if the US market is not a bubble, the first part of the argument goes away that this world is in some mad bull run. And if you look at India, the Indian market returns for the last 3 years for the index, which is not even, let's take Nifty, because clearly Nifty has done poorly. But if you do even the 500 index for 3 years, it will be up around 15% per annum, which is more or less in line with our longer term history. And now let us say that somebody thinks it's overvalued because the earnings were a bit slow in this quarter and last quarter, and therefore the fair value is 19 times PE, but you are at 21 times PE. So you are overvalued by 10, 15%, which you have accumulated over 2-3 years. Who is to say that the market is always supposed to trade at whatever is your longer term average? And secondly, that the correction has to happen in one stroke. So that first it has to correct 10%, 12%, and then it will become a good market. Maybe it corrects gradually. Maybe it goes up first and then goes down. It is not wildly out of line. I have seen wildly out of line markets. For example, in 2004, 5, 6, and 7 calendar years, the market was up 40% per annum. If you look at the 500 index, it was up some 39 point some percent per annum. We have seen periods like 1999, when the market went up some 85%, and the NAV of my fund, Alliance Equity Fund, now called Birla Sun Life Equity Fund, in that one calendar year was up 280%. Those are wild bull runs. This is a measured bull run.
No, I remember those times. Cub reporter, but I have interviewed you in Alliance as well, Samir. But, when we are stepping into the coming year, do you think we will still continue, or fund managers should be chasing, the EMS or the e-commerce, the new gen stocks? What has been ignored? The HDFC banks, Reliance, TCS, those were the ones that the market's not been looking at. Will things turn?
First of all, when we talk about market, first we talk about the market is 500 index.
Yes,
So
of
the
course.
question whether the market will go up or not is not whether Dixon will go up another 100%. Most probably it won't. And neither will my food companies go up 100%. But can they go up slightly more than that? So before that, the market itself will have some rotation in a sense that obviously because the large caps have massively underperformed mid and small. And in the past, if you do before this round of bull run of mid and small in 2020, so if you look at previous 20 years ending in 2019 December, let's say, which I did, broadly the large caps and small caps and mid caps are not materially different from each other. The small caps actually in a big 20-year type phase actually underperformed even the 500 index. Means broadly they converge.
Yeah.
Similarly, in the US, they converge, except that in the last 6, 7 years, 5 years, there the opposite has happened. That the large caps, particularly these big 20 odd companies, have done much better. But again, there in the past, they converge. So,
Yeah.
therefore, first we have to say that whether next year is a year for which we have to be bearish and sitting on cash and waiting for a crash, I think that is not obvious and not needed. But therefore, the market returns, if the market returns are expected, according to us, to be in the same range as our historical longer term average, which is 12, 14%,
Okay.
then these stocks which are growing 10, 12, 14% with a higher confidence, like these banks and all you're saying,
Yeah.
become better candidates. And that's why not me only, many of the
Okay.
guys, even
No, no, I got that. Yeah. So,
are,
what
are
will
good.
you rotate into is my question. One of them you picked up. One of them you would rotate into would be banks. What else would you
We
rotate
never
into
rotated
and
out
rotate
of
out
them.
of? Okay.
We never rotated out of that. So our
Okay.
logic is that you will have two or three main chunks, which mostly the market has converged to financial sector, financial services, private sector banks, and some form of IT, which for 2 years we were bearish up to June of 24, and now we think IT is a good sector. And then you need a bit of jing bang. You need a bit of dreams and this thing where you can grow at least the earnings at 30% and 25% for 3, 4 years, hopefully. And that some people this year chose EMS and we chose the food delivery and the new platform type companies, which are, these
Zomato types.
Paytm and PB FinTech and Swiggy and Zomato and car trade and all, where you're hoping that there are some longer term, tailwind so that at least for the next few years, 3, 4 years, you're not growing at 15%, 12%, which is what our boring banks
Okay.
and even IT might grow in that range, which is this 12,
Okay.
14%,
Got it.
15% type range. So you need a jing bank. So that is why it's called a portfolio.
Got that.
We will not buy the EMS companies because our logic is that uh, we have a benchmark, and those benchmarks of EMS companies trade at 8 multiple and 10 multiple, and in India you can make it 20 because everything is double, but you don't make it 150 multiple.
Okay, fair point. Well, just one more word on consumption. This year has been the year for the discretionary consumption, the Trents, the Indian hotels, the Titans, and it's not been for the FMCGs. Will things continue that way or will the tables turn?
Actually, it's not been for Titan also, because
Okay.
we sold it about 9, 10, 12 months ago because I watch Netflix and I could see that there was this documentary on lab grown diamonds, which has now become a
All
hot thing
right.
going on for long. And, this is where you made more money. And more than that, it spoils the whole thing of buying diamonds if you can't distinguish, even though
Yeah.
technically somebody might know this is a
Yep.
real diamond or a lab grown or whatever. But in general, I think what our basic concept is that very high valuations can be a stumbling block, even though the
Okay.
companies may grow. So we don't have
Okay.
these kind of consumer companies. We have a few of these Zomato type, which also you can say high valuation if you so desire.
Okay.
But their growth rates will be very high compared to the rest for a number of years.
Okay. Okay. Samir, you are also a global fund manager. So tell us, do you think US exceptionalism goes away? Do you think smart money will come back to EMs and India?
No,
And when?
smart money should buy both. After the Trump victory, bought all the 4 asset classes personally because in my fund I only broadly do India, and then we have a global fund. But that is India, US, China, and gold. Everything is a buy. First of all, please remember we've not had a blowout rally. We've not had that last thing where markets go up 20-30% in a 2-3-4 month period. And by the way, you can see all these previous bull runs that people talk about, and then they say that they sat on cash. So let's say the 91 bull run. Harshad Mehta time, boom, it'll go up some 80-90% in a few months and then it'll crash. Same thing happened in 99, 2000, where in the last part of 99 and first 2-3 months of 2000, the market would have gone up, or these tech stocks would have gone up 100% kind.
Right.
And even in 2007-8, because I know my NAV, my hedge fund NAV went up 104%. Okay. This year and this period has not been like that. It has been very measured. And the reason why it is measured is that there is supply. Now, people take it as a negative that there has been so much supply. But simultaneously, there has been so much demand in the sense of flows from domestic guys. But whatever be the reason, the supply has made the overall market in check. So the overall market has not gone up, maybe other than 10-15 stocks, in which we have also become negative on a few of them, and we have a few. Every portfolio manager will have 2-3 such stocks with a combined weight of 7-8%. Or somebody can have Trent and something, I will have Zomato and something, somebody will have Dixon and something, but it's not driving madness in our portfolios or in the hype in the market.
Got it. Samir, out of time, and here's wishing that you have a superb 2025. Thank you very much indeed for joining us.
Thank you very much. Be bullish.
Oh yes, be bullish. Advice taken. Thank you very much, Samir Arora, for joining us in this year-ender. And here's wishing all of you once again a happy 2025.